All right, this morning, online used car seller Carvana debuted its 26-car vending machine in the Motor City of Detroit. The 8-story tall location can hold up to 27 cars. Ernie Garcia is Carvana's CEO, and he joins us now. Ernie, good to see you again. Listen, your company has captivated the minds of Wall Street. Look at this note that I caught last night. Headline, bear case on Carvana nearly obliterated. What is going on with your company? How have you gotten the company to break even in this type of environment?
So I think most importantly, the experience we offer to customers is very high quality, and we've got a team that's worked incredibly hard through this whole pandemic to ride out the difficult times and then to position us really well to handle this new influx of demand that we've seen come our way as a result of more people staying home and shopping in new ways and opening their minds to e-commerce generally. And I think that served the business very well.
You expanded to operate into 100 new markets earlier this year. Not a lot of companies are expanding during the pandemic. Yours is. I think you're now in a total of 261 markets, is it? Are you concerned, though, at all? I mean, it seems like you're not, that when things start to get back to normal or somewhat back to normal, folks may start to move away from this trend of buying vehicles online, may want to go to the dealership and have that sort of in-person experience.
So we're not really concerned about that. I think every business has two layers. The first question is, do you give your customers a better experience than they would get elsewhere? And I think we felt really good about that for a long time. And then the next question is, are customers open-minded to trying your business and to trying a new thing? And I think what the pandemic has done is it's accelerated customers' willingness to try new things. And when they try new things, they often like new things. And so, we think that shift is a material shift that is likely to persist. And then we also would note that, we've been growing at roughly triple-digit rates since inception in 2013, just by virtue of delivering great experiences to customers and them telling their friends about it. And so I think there's a lot of inherent growth in the business that is independent of the changes driven by the pandemic.
Ernie, I'm one of those customers. In the third quarter, I tried Carvana out for the first time. I bought myself a car. I have never done this before. Overall, it was a very good experience, but tracking my car actually came from Nevada. It got delivered right to my house. Overall, great experience, couple bumps in the road, but all in all, really enjoyed it. But I couldn't help but to think, wow, they're taking my car from Nevada, doing a 150-point inspection and dropping it off my house. There's a lot of costs there. How do you could just contain those costs and just really drive leverage over that model? Does it come down to opening more vending machines closer to people's homes?
Sure. Well, there's a lot there. And first, most importantly, thank you so much for giving us a shot. And please email me about whatever bumps were on the road, and we'll try to make sure we see to fix those. But I think there's a lot in that. So if you think about a car being shipped maybe a couple hundred miles to you at first, that sounds like it's expensive. And in many ways, it kind of can be. But you have to think about what it's replacing. It's replacing normally the cost of having a dealership that's extremely expensive that you would have gone to. It's replacing the expense of having someone in person that would have walked you through the entire experience and spent 4 hours as you bought your car. It's providing you with a broader selection, so you're more likely to find what you want, and that means it's reducing our customer acquisition costs. And then I think, importantly and interestingly, it also gives us the ability to buy cars anywhere in the country where they're inexpensive, and then provide our customers with an even better price because we can ship them for less than the variation in price across geographies. So I think there's a lot of really good things that happen there. No doubt there is shipping expense, but we think that's dwarfed by the other benefits.
Are you being able to buy enough cars?
So in general, in the market right now, there's clearly a dearth of supply. That starts with new cars, where many of the manufacturers struggled to spin their manufacturing capacity back up after the kind of initial onslaught of COVID. But I think that's trickled down throughout the entire market. We've been growing this business of buying cars from customers as well, and that's gone tremendously well. We announced that in July we bought as many cars from customers as we sold to customers. So that's a really big part of our business now, which is great because it gives us access to incredibly high quality cars from consumers themselves in a really scalable channel. So getting access to cars has not been our issue over the last several months. What we've been dealing with is trying to ramp up our capacity to do that 150-point inspection that you talked about and ensure that we deliver certified cars to our customers that are in great shape so they continue to have faith in us in the future. And we've got these large inspection centers. We'll put about $1,000 of parts and labor into every car that we deliver to a customer. Scaling that up really quickly is obviously a big undertaking, especially in this environment. But the team's done an incredible job, and we've been scaling it up very fast.
I know your earnings are coming out, I think, early November. You're forecasting record sales, break-even results for the third quarter. You've yet to turn a a quarterly profit. Can you offer up any kind of timeline?
What I would point to is, as I said, we're a 7-year-old company. 3 or 4 years ago, we were at, negative 20% EBITDA margin, and then negative 16%, and then negative 9% and negative 6%. And we announced that, this quarter we expect to be approximately break even from an EBITDA perspective. So, the scale in the business is really showing up in that incredibly rapid leverage. And then, as you discussed, we're launching our 26 vending machine today. We're in 260 markets. We opened 100 earlier this year. So we're pouring investment back into the business to ensure that we can continue to grow in the future. And despite all that investment, we're still making the progress that we discussed. So we're incredibly happy about that. And generally speaking, like to stay away from timelines.
All right, we'll leave it there. Ernie Garcia, Carvana CEO, and I will send you an email. Overall, happy
Please do.
customer. Happy customer.
Thanks. Appreciate it.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.